The most reckless spending ever seen in history is going down right now. You came here for the truth, so let me unveil that for you. Today we're going to talk about your cash, your money, where you keep your hard-earned savings, and they are throwing it out the window. They are flushing it down the toilet. That's right, you can see that more and more tax dollars go in, your tax dollars going in, and yet, no matter what, they always spend more. They always find a way to take more from you. This has got to stop. I'm sick and tired of it. People are working themselves to the bone, and yeah, we get nothing in return. We get less in return every single year. That's enough of that. We are going to look at the details today of what's been happening. We're going to talk about the repo situation. We're going to look at what's been going on in the economy. They tell us one thing, they're doing another. Something doesn't add up. Let's get into it right away. Another day, another repo. I wanted to show you the updates on this. You could see right now, this is for the maturity date of May 28th, $485 billion. This is a record. It has never been this high before. This is a reverse repo operation. People have been asking, what's this reverse repo thing? What's the repo thing? I don't get it. This right here, this Bloomberg article actually explains some of it that I wanted to show you right now. The amount of cash sloshing around in the US dollar funding markets looks unlikely to abate anytime soon, and that's set to put downward pressure on short-term rates until next year unless officials act to alter the situation. The Federal Reserve has to change something, or else it's just going to continue to get worse and worse and worse. Okay, so they talk about Bank of America, what they expect to happen, and so on. At the bottom, that's something that has happened in other parts of the money market, talking about the abundance of cash driving down yields on instruments ranging from repurchase agreements to treasury bills, in some cases below zero, bringing those rates down below zero. And that in turn has fueled demand for the so-called reverse repo facility, which on Wednesday surged to $450 billion. And of course, you see that that was the third highest on record, and it's gone higher and higher and higher. This right here in the second paragraph, if I pull out the highlighter, they're just showing you here. Okay, the reverse repurchase agreement operation, it's a facility that has become a go-to place for parking cash for these particular institutions. Okay, we don't know exactly who's doing this until 2 years later. It's always a 2-year delay. While it offers absolutely zero yield, the facility at least doesn't charge investors for the privilege of keeping cash there, which is effectively what happens when yields go negative. So they're choosing to put their money here instead of in a negative bond, instead of somewhere else. And this is all because of the activities of the Federal Reserve in the first place. They're buying up the treasuries. They are doing that. And of course, the whole system has been distorted. They should not be doing any of this, and yet they are. They are, and they do so every single day. This happens to be a chart which you can see. Essentially, if I pull out the highlighter, you might be able to see it already, but right here, it's the spike that we've seen recently, and this chart goes back over the last few years to give you an idea of, when the reverse repo operations had started to happen and so on. It depends. You got to make sure that there's a difference between the repo and the reverse repo. But essentially what we're talking about is a manipulation of interest rates on one hand with the open market operations. And then you've got these primary dealers, the banks, that are parking money at the Federal Reserve. Quick little description here, okay? This works just like you have your own commercial bank, okay? Your own commercial bank, you as a person could take your deposits to that commercial bank, leave it with them. Well, just like that, the commercial banks kind of do the same thing with the Federal Reserve. They can keep their cash there. And so this process here is just absolutely getting out of control. So while the operations might be just one day and so on, it's not necessarily longer dated, longer term and everything like this. This is not something that is supposed to happen. And that's the whole point here. That's all I'm trying to say. This isn't supposed to happen, but they're doing it anyway. And there's something obviously broken. It has to do with the Federal Reserve's activities in their quantitative easing. As if the amount of spending that has gone through the system wasn't enough, you're talking about another $6 trillion for the budget proposal that would take the United States to its highest sustained levels of federal spending since the 1940s, while running deficits above $1.3 trillion throughout the next decade. So we're talking about $6 trillion, it says right here, for the 2022 fiscal year, and for the total spending to rise to $8.2 trillion by 2031. Of course, we only need to spend right now, and then, we'll spend less later, we promise, right? I mean, who actually believes this? And that's not the end of it, because of course, my favorite, I know it's your favorite too, Janet Yellen says that, and I really laughed when I first read this article. This is hilarious. Check this out if you haven't seen it. Yellen says the government is operating like it's 2010, as if it's like fashion, it's out of style. Oh, that's so 2010. Calls for more aggressive spending. They've already spent more than ever in history, and she's saying, this is like 2010, you gotta spend more. Talk about keeping up with the Kardashians. My goodness. You haven't done enough? You haven't destroyed the currency enough? But I'll show you something, because it's not just about that. It's not just total amount of spending. There's so much more to it than that. We'll get into that in a few minutes, okay? So you can read what you had to say. The whole point here is they're going for it all. This isn't enough what they've done so far. They're taking it a step further. So let's get into the breakdown. Number one, governments are preparing to spend trillions more. So think about that, not just as an investor, which we'll talk about in a second, but you, your own savings, your livelihood, your family, and everything. And then we have number two, which we'll talk more about in a second, but you gotta know that the jobs numbers are getting better, so why are they spending? Doesn't that seem weird to you? And then number three, this is a complete and utter destruction of the currency. We know that. You don't have to look at necessarily what the Federal Reserve is doing. Look at what the governments are doing. They are going into the maximum amount of deficit. They've got the biggest debt you have ever seen, and this goes for any country at all, and yet they're going for more. So you as the individual, what can you do? If you believe they're going the inflationary route, you've got to know that, and you've got to prepare accordingly. Real assets are the number one way historically in order to prepare. You've got to get everything you can in order, not tomorrow, not during the next, budget proposal, not when the bill goes through Congress and, this and that. You got to prepare now. And that leads me to this. Look, this particular article out of Reuters, and I'll show you more in a second. The economy, which in the first quarter notched its second fastest growth pace since the third quarter of 2003, is gaining speed. Other data on Thursday showed business spending on equipment accelerated in April. Things are fantastic. The economy is off and running, as they say. Going forward, growth will be supported by the pent-up savings that households have amassed. So you got all these pent-up savings. You got people ready and willing to spend. You got the jobs numbers that are apparently better than ever. You've got growth at breakneck speeds. Here are the numbers. U.S. jobless claims continuing to decline. This is showing you, that was from Reuters. This one here is from Trading Economics, which I love this website, by the way. You can see the trend on the graph. It is getting better and better according to their numbers, right? According to their numbers. Remember that. Then you see this at the same time, which shows you what people are actually dealing with. We'll talk about that in a second. So what I'm trying to propose to you is that they're telling you one thing, and yet clearly there's a different story going on. Why are they printing all this money when we're already on the trajectory of growth? You could simply just reduce the amount that's being printed and pumped into the system nice and slowly, and everything should be okay if you're telling us the truth. But I really don't think that's the case. US firms are able to pass rising commodity prices through to customers. Yes, they have, and they will. Showing you multiple companies that have already committed to that. And then on the right-hand side, automation diminishes the importance of labor. That's what they're doing. This is from Goldman Sachs, by the way. They are talking about this. They know what's going to happen. If you cannot find somebody to flip burgers at minimum wage, they're going to get Flippy the robot to do it, because Flippy the robot costs $30,000. If Flippy the robot doesn't have little hairs that fall into your hamburger, Flippy the robot doesn't leave you a surprise in your hamburger, Flippy the robot works 24/7. All right, now we got something going on right now with the stock situation. I mean, it's unbelievable. Here's the first thing I want to tell you. U.S. stocks rose on Thursday after jobless claims fell to a new low in another sign of economic reopening, okay? So I'll give you a better description of that. But the S&P at about 4,200 is where we went to in this particular trading session. Probably by the time you're watching this, it's the previous trading session. And of course, the so-called meme stocks are really being driven up. I'll give you some examples like Hertz in this case here that they mentioned. They mentioned AMC, they mentioned GameStop, of course, all the names that you're used to hearing. The retail basket being that green line, and the S&P 500, which has done very well, okay, through, this period. Is showing you basically from the beginning of 2020 up until the present. And it just gives you an idea of what has happened over this time. And of course, we've seen the performance being excellent, but this retail basket has done even better. It's unbelievable to really see how far this has come. This happens to be the stocks with high small lot trading activity in shares. So this is just trying to show you some of these ones like AMC, which have really got a lot of attention from the retail traders and so on, which their prices have accelerated recently. Quick look at this right now. I just wanted to show you, this happens to be the S&P 500 index. And if I zoom in, this right here is today's trading session as I record this, today's trading session. And you could see that it did get to a point, but it, throughout the afternoon, it started to dip down further, ended off at about 4,200. You're looking at the Russell in this case here, which propelled even higher. So small cap stocks going even higher. If you look at AMC in this case here, had gone up, to a level, it looks like it finished off at about 26, 27 for the day, if I have that right. GME, and looking at this, if I could pull that up, you're not seeing the same interest in GME as AMC has. So AMC is really the one that's seeing a lot of attention now. And then costs. I didn't even know before the whole frenzy began a few months ago. I really didn't remember that this company existed, but the stock went up so much just in this one trading session, and it continues to do so. You're looking at volumes being unbelievable for a lot of these stocks here compared to what we had seen before. So while the market didn't necessarily do that well, you could see that certain stocks, whether they're meme stocks or other stocks that are being, part of that short squeezed basket, you're just seeing a lot of interest in those right now. If you haven't already, you got to join the insiders. This is my way of getting to you directly. Look, the video I did before this didn't even hit 10,000 views. That's how significant this has become. And why? Because people simply are not getting it all the time. They don't get my videos all the time. And if they don't get that video, of course, it can't be passed on to the next person. All you got to do is sign up to the insiders at the Money GPS. You get it for free. You get the video 5 days a week, and it makes sure sure that you're always getting these videos. It's so important. It will contain, at a future date, in the near future, hopefully, I'm going to be able to put daily content around that, fresh, new information, possibly with what's happening in the stock market or the economy and so on. I want to put together a real newsletter in the near future, and this is my way of getting to you. But for now, at least you can get the video so we can get around their systems. I'm trying to do everything I can. Sign up, please, at themoneygps.com. If you like the video, hit that thumbs up button. If you want to learn about e-commerce for free, I did this for you. 10,000 people are in this course, free course that people charge $1,000 for. I give it to you for free at the amazongps.com. If you haven't seen this video yet, well, don't worry, because not many people did. 10,000 only. I got 260,000 subscribers. Definitely watch it. There's so much good content in here. Click it and I'll see you there.